These companies are winning giant contracts. They're moving very quickly. Their market's moving in their favour, and that's being recognised in our share price.
Hello, you're watching Proactive. I'm joined by Mark Boggett. He's the CEO and co-founder of Seraphim Space, manager of the Seraphim Space Investment Trust. Mark, very good to speak with you. For investors new to the story, what exactly is Seraphim Space Investment Trust, and how does it give public market investors access to private space tech companies?
So we are a investment firm based in London, but operating internationally. We launched the world's first space investment fund 10 years ago. We've now got 3 funds that we've invested in space, both public and private. We also run an accelerator program, which works with spin-out from universities and spin-outs from teams like SpaceX, that we back at their earliest stages and take them through a program of 3 months with 10 companies at a time. So that's the largest global space accelerator program. We then have the private venture funds that invest in the riskiest end of the space market, seed and Series A, again globally. And then our publicly listed Seraphim Space Investment Trust is our growth fund. So through that vehicle, we invest into the companies that are in their B rounds and C rounds and D rounds, which means that they've effectively developed their technology. It's largely been proven, and we're really investing to scale up those businesses. So during the course of the last 10 years, we've invested in a total of 46 companies through those 3 funds. We've now had 9 unicorns from that, 5 IPOs, and just 4 failures. So whilst you think about space being sort of super high risk, the numbers don't point towards that.
Mark, your 4 largest holdings delivered a combined £69 million uplift in the December quarter. What's driving that re-rating, and does it reflect company-specific execution or a broader shift in how the market values space tech?
So it's a combination, actually. So, during the course of the last year, we've had macroeconomics that have really been making sort of generational changes. And in that, I'm talking about here in Europe, in relation to defence, and the clear position that Europe has that it can no longer rely on the US for its defence capability. NATO was funded 60% by the US historically, and Europe just became reliant on the US capability. That's all come to a head. And Europe has agreed a €1 trillion budget by all of the various countries, including our own, lifting their commitment to NATO up to 5% of GDP. So this is a very significant amount of money that needs to buy resource in order to address the defence needs of our nations. And space plays a really important role in that, and an increasingly recognised important role. So it's things like launch, it's satellites that provide monitoring of Earth. It's around satellite communications. So we've seen, for example, in the Ukraine, that are completely reliant on Starlink for any form of communication. Europe, doesn't have their own equivalent capability that we now feel that we need. GPS, of course, and then being operational in space and being able to support the important assets that we rely on. So there is now a really big push in Europe to be able to access this capability that they need. There is a priority around technology, and the more cutting edge the technology, the better position you have relative to future aggressors. So there's really been a sort of refocus away from large traditional defence companies to more nimble startups and earlier stage companies, provided that they can demonstrate that they've got best in class technology. So all of that has really played very well into the market that we've been operating in for the last 10 years. We have been just quietly in the background trying to identify category leaders within each of these different categories, and that is now being recognised as supply chain and customers to these governments who are looking to increasingly focus on defence for their and space. So what we've seen, so go back to answer your question there, that's the sort of background as to where we are. To answer your question then, we've got a range of things going on. So first of all, ICEYE, which is our largest company, they have been, they are a satellite Earth observation company that uses radar to be able to see every square meter of Earth every hour, and then provide a sort of level of understanding that's never really been seen before. Their radars are able to see the ground day and night. Doesn't matter what the weather is, you can reliably see every square meter of Earth. And of course, that's got huge benefits for defence. So they have been winning contract after contract after contract with European governments during the course of the last year. And that accumulated with a 1.7 billion euro contract with the German government in December. So what this is just evidence that the rubber's hitting the road. These giant budgets that are talked about politically, there's now evidence that that is now being funneled into to companies. And what it shows is that the procurement processes that really used to hold back defence, literally taking years to make decisions, has been swept away by the very need that we have in order to be able to step in and rely on our own capability rather than relying on the US. So ICEYE really is a poster child in the defence and space industry. It's our largest holding, and it's growing very, very quickly. So that's number one. Then the other three companies that you mentioned, two of them have been re-rated because they've done large funding rounds, both $150 million. That's Hawkeye 360 and Deorbit. And I think that this is also just a reflection of the growth that those businesses are enjoying because of new contracts in relation to defence. But also it demonstrates the interest of incoming investors who want to participate in this new growth market. They're looking for companies that have got heritage in this market. They're looking for the companies that have already won or that are best positioned to win these new giant contracts. And these two companies, one, the Italian company Deorbit, and the Hawkeye 360 is a US company, that are sort of well aligned to be able to benefit from that. So this is about raising money at higher prices that then filters through as increased NAV within our fund. And then the fourth one is actually a UK company called Allspace that does they've developed antennas that go on the back of cars, boats, planes, trains, tanks, that connect those mobile vehicles to satellites in space. But uniquely, those satellites can be from any company, and they can also be in any orbit. And those are a number of things that have never really been available to the market before. So this is sort of like the holy grail, particularly of what defence are looking for. So this is a company that's been doing well in terms of the defence market. So they have an activity underway that we are not able to yet talk about. The other companies have made their own announcements about these activities, whereas Allspace hasn't yet made that announcement. We've had to reflect the increased valuation in our net asset value because there's a requirement for us to do so. But unfortunately, we're sort of out of sync with being able to also talk about what the news is that led to that increase. And it's a really dramatic increase in the value of that particular holding. But overall, this is really about defence growth that's really coming through, both in terms of the underlying portfolio contracts, but also investor appetite to get aligned with these companies.
And how's this translated into your own performance, Mark? How has the investment trust been performing?
So we're one of the very few trusts on the market that are now operating at a premium, which I think is really sort of really the right place to be. It's reflective of what's happening. You know, why would we trade at a premium? Well, it's because investors believe that the NAV is growing at such a pace that the sort of backward-looking way that we reflect NAV within our sort of valuation approach is kind of out of date as soon as it's done. These companies are winning giant contracts. They're moving very quickly. Their market's moving in their favour. and that's being recognised in our share price. And it's only the same thing that's happened to, if you look at any of the other defence companies in any market, you'll see that they've doubled during the course of the last year, because investors are anticipating much bigger future revenues because of this huge wall of money that is now being filtered into this market. The same is true of us, but we are hovering around our net asset value, so we are being sort of valued around or just above the actual value that we've been able to demonstrate, rather than a sort of speculative value. So we're not sort of a giant premium. We're more or less around the actual price of the NAV. So I think that demonstrates that there's more to go. We made a statement to the market when we with an RNS about these 4 companies that we've revalued ahead of our release of our numbers on the 5th of March, just because things are moving so quickly. And we made a statement within that statement to say that you can expect more of this to come, because this isn't just about our top companies. This is just a change in the market in which we operate, where there is just vast amounts more money that's available from the customers, and they are very aligned with wanting to engage with cutting edge technologies as quickly as they can. So there's a new impetus in the market, there's a new ways of procurement, and all of that is now being reflected by the statements and numbers that we're putting out there through the portfolio.
Well, Mark, I hope you'll continue to keep us updated with your progress. It sounds like an exciting year ahead for you. Thank you very much for your time today.
Thank you, Stephen.
Mark Boggett, the CEO of Seraphim Space Manager.